First of all, Prabhu, thanks a lot, for taking out your time.
Thanks, Suchit.
Definitely, Prabhu needs no introduction, but just for, let's say, in case anyone of you doesn't know him, Prabhu is the co-founder of M2P Fintech. He currently drives operations, strategy, new product development, compliance. I think, a whole list of things at M2P. All the difficult things are done by him. Prabhu is also a very space tech enthusiast. So have you booked your tickets to the moon or how is it?
Not yet.
Not
Weighing
yet.
options between Blue Origin and SpaceX.
So I think that is the thing. Yep. And Prabhu, anything you would like to add? I think Prabhu has been chosen as one of the top leaders in the B world, business world disrupt 40 under 40. And a lot of things, but we have to get started.
Sure.
So,
Yeah. I mean, Suchir, very quickly about me.
yeah.
I'm a guy born and brought up in Chennai. Did my bachelor's and master's in computer science, information technology. Uh, you know, climbed onto the IT bandwagon. I was an IT for almost a decade or more than a decade, in fact. And then, felt like, I was getting saturated in terms of, new learning and stuff. Always wanted to start up on my own. So attempted to start up in 2014. Met my co-founder Muthu and Madhu. Of course, Madhu and I are brothers. So that's how our story started. Maybe I'll talk over the details, finer details as we get along. So Suchir, I didn't want to kind of cut your flow. I thought like I'll quickly.
No. So thanks for that, Prabhu. So interestingly, I was reading on the website that it all started over a cup of chai, and why not filter coffee in Chennai? So let's go back to 2014, and if you could tell us how the name M2P started and why Fintech Infra, So would
Absolutely.
love to understand that here.
Absolutely. So this was 2013 time frame when
Okay.
Madhu and Muthu were colleagues at Visa. Visa, the credit card company, right? So they were they were actually kind of like the only two Tamil speaking guys in a Mumbai office location. So you can imagine they always go out for whether it's a chai or a smoke or a lunch or whatever break it is, they go together, right? So that's when this conversation started. So like shortly put, what banks or financial institutions had as technology back in 2013,
Right.
and what companies like Paytms and Slice and all these companies of the world wanted to launch in the market. Okay, it was a big difference, right? There was a big white space. Nobody was actually filling it well.
Okay.
There were payment companies. There were giants like Euronet and FAS and Fiserv and all these companies, but all of them took more of a. Nobody took a product approach to make it easier in the market, make it launching fintech products easier in the market. So that's where we thought like we can start up. But honestly speaking, infrastructure as a word did not occur to us back then. We thought like we'll start a program management company where launching tech programs would be easier. Like, can we actually make ends meet, make the actual, what do you call, ingredients that are required for every fintech program? Can we bring all these people together and, create more of a, consortium of sorts, right? That was the starting point. So we started with prepaid as a product. We thought like we can launch quick
Right.
products using prepaid as a prepaid card as a platform. But yeah, I mean that was a starting point. At least for
Right.
2 years from there on, we didn't actually call ourselves as a infrastructure provider. That was our starting point. I think more to do with why we chose prepaid. It was because it was the one of the cheapest, or I would say the one of the low cost product offerings in financial services back then. Fintech, honestly speaking, fintech as a word did not even happen back then, right? Like fintech
Right.
very rarely called. Fintech as a term became much more prevalent only in the late 2010s, like 2016, 17 onwards, like after demonetization. 2013, 14, fintech was not even a term. So we thought like, okay, can we actually give a spin to the same old prepaid product which has been there for over a decade? Can we actually, like Paytm as a company was probably like a
Yeah.
$20 million company. I'm just telling you, right? Like Paytm was
Hmm.
barely used for recharging your mobile phones or like paying postpaid bills or current bills and all that, right?
Right.
That was what Paytm was used for. Like Paytm was not the actual super app that we know today back then, right? Like Paytm is currently a bank now. So it was, I would say, that was the starting point of the India fintech story as well. Like probably we were at the right place at the right time.
Hmm.
So we thought like we were absolutely, lucky to have started back then instead of trying to procrastinate that decision on and on. So we started very small, put together a couple of deals, and we thought like we worked with very, you wouldn't even kind of identify if I say the bank's name. We worked with the first bank that gave us a chance was DCB Bank. It was called
Okay.
Development Credit Bank back then. Only the bankers know that there was such a bank that existed. It is not a brand. It is not like a brand that has ads and all that, right? Like DCB was
Right.
absolutely not known anywhere in the market. We partnered with them. Uh, that was actually a lesson which we didn't even know. We just went to the motions. That was the only bank that actually, honestly speaking, gave us a chance, right? In hindsight, that was one of the best decisions, because had we ever gone with a bank that already has a big market presence and all that, we would have probably
Hmm. Hmm.
got lost. Right? Starting with such a small bank gave us a couple of advantages. One is we were under the radar. Not many
Right.
people saw us in action, which was good for a B2B business. Number two, it kept, like, the bank was also hungry. They were also they had this appetite to actually make this really working, and they also put in that hard yards. Like, we as a startup, we can always burn midnight oil, but the bankers need not do that. They are anyway paid,
Right.
right? They get their salaries, so they don't have to actually sweat it out. But these bankers did that. Like DCB Bank, for instance, some of the
Hmm.
team members there, they actually kind of rode the wave. They like very well accommodated us, and took us through the learning curve to kind of make like
Sure.
products launch in the market. Yeah, I'll stop here. I'll probably let you go through your flow.
No, no, Prabhu. I think that's very interesting to hear. So, in fact, Prabhu, a lot of people we have spoken to, like Nitin Gupta, also from uni, they always say that, focus on a small problem, focus on one problem, right? Like when you were building for prepaid cards, maybe 2.5 years, a lot of them are early stage startups. So you will have a lot of distractions, I believe, right? I'm doing prepaid. Why don't I do debit? Why don't I do credit? Why don't I, this guy is making so much money in LMS. Why don't I do this, right? How did
Absolutely.
you guys, like keep your cool? How did you guys keep your focus?
See, we started with a bunch of thumb rules. Okay, the first thumb rule was we will always, have a stop loss. Like we'll not attach any emotions.
Okay.
The work that we do, uh, absolutely no emotions. Just because I feel like some technologies, like most of the startups, if you see, they'll experiment with technology like anything. Like
Right.
the biggest and biggest of companies like Facebook, for almost a decade of since their origin, they just use plain old PHP
Okay.
and MySQL as a database backend. They used very openly use open source kind of software. They generally don't get fancy, right? They made the best out of each and every stack that was
Hmm.
available out there, right? And then they slowly build React Native, what it is today, right? Like what we call as React
Okay.
Native today. Most of the mobile development happens using React Native, but
Hmm.
Facebook basically knew what they wanted, and then they slowly built it using what was openly available back then, and then they made the best out of it and then started building for their own once they attained that scale. Similarly, what we thought was, let's just build using open source technologies, see what is required for our business. Let's not just get fancy with all the tech that we want to use. In none of our materials you will see AI, ML, or anything like machine
Right.
learning. We will not actually over fantasize any technology jargon out there. Why? Because what should actually work is, like, when somebody pays using any of the products that we power, it should work, right?
Got it.
The biggest truth, the first thumb rule is the product should actually work.
Right.
Forget about how well it looks, how sexy it is, actually the experiences and all that. Right? That's all of those things are about packaging and basically displaying it. But the product should fundamentally work. So we thought
True.
anything and everything. let the market be the only decider. Let's not attach any emotions. Let's take it to market first. Right. So prepaid was one such product which we were able to put it together in about, we started it in what, 2014 July timeframe. By November we had a company registered, all the paperwork done. May of 2015 we launched the product. So we went live with a product called India Infoline Gold Card, Gold Loan Card, right? So
Okay.
you go pledge gold in a IFL branch, you get a DCB Bank powered prepaid card loaded with the loan money. Back then, cash
Oh,
disbursement was allowed up to 50,000, but above
okay.
50,000 you were not allowed. So we used a prepaid card to load the money. At that time, you can load a
Hmm.
maximum of 1 lakh in a prepaid card, and then it's just like any other ATM card. So customers can just walk
Got it.
away taking the prepaid. It's a very simple, low hanging kind of opportunity. We thought like let's just grab that. Like basically fix or probably iron out all the rough edges and then probably expand from there, right? So the other thumb rule was hit stop loss, right? Like always keep a stop
Hmm.
loss for any
Okay.
product that beyond a certain point, if it doesn't scale or if it doesn't work, right? Just remove all emotions, hit the stop loss, right? Like first product that we tried was we thought we will build a big QR based, acquiring system. What we see as UPI QR today, we actually saw that there was a big opportunity over there, and we built it. And then we had to just throw it to the dustbin because it didn't work. We were unable to
Got
change
it.
even the one area in Chennai. There is an area called Nanganallur, which is probably a 5 square kilometer area, like probably as big as like Indranagar in Bangalore or whatever, right? So we were not able to even onboard merchants in that single area. So we thought like this is not working. So we just hit stop loss and said we would have probably, as a startup, we would have easily spent about 20 to 30 lakhs of money back then, right? Out of a capital base of 1 crore or whatever we started with.
Right.
Okay, we spent almost 25-30% of our energies there and it didn't work. So we just threw it to the dustbin and said, okay, we'll focus on prepaid because this is working. And then we
Right.
onboarded multiple customers. Like I think in a year from launch, from 2015 May till demonetization, like probably 12 to 15 months, we onboarded almost, I think, over a dozen customers. By 2016, when
Nice.
we like the demonetization happened in November, right? Like we had almost more than, I would say, 20 customers. Uh, but I would say 3 or 4 variants of the same product. We didn't actually experiment too much. That was the other thumb
Got
rule.
it.
Like don't just spread too thin. With
Hmm.
the resources that you have, just play to your strengths. Whatever you can deliver, instead of doing 10 things in a mediocre manner, let's just do 2 well,
Yeah.
right? That probably worked for us, because why we had to do that is because we were not funded. We were
Right.
bootstrapped. From 2014 all the way till 2020, we were bootstrapped. None of the players in the market knew about us. And we wanted to be bootstrapped because that kept us disciplined and, sticking to all the thumb rules that we started with. We didn't have really any money to kind of spend and, experiment too many things. So we were happy with what we built and what we were able to take it to market. All we needed was like the viability gap, or I'd say the working capital for about, every card that ships out of our whatever, right? Like our factory, it basically starts generating revenue for us in 2 months. Once it
Got it.
hits the market, probably it's like a 2 to 3 month period by when it starts paying back. So we knew for sure like this is just we'll have to provision for ration for probably 2 months or 3 months of runway, right? So we always had, that was the other thumb rule. We said when we started up, if we as leaders are, we can't call ourselves leaders if we don't pay salaries and vendors on time. We
Hmm.
used to work with multiple vendors, right? Like because we dealt with cards, there was a card printer, there was a card, shipping
Right.
agency, there was somebody who actually managed inventory. So we had to pay all these guys well. So what we did was, like, generally banks are not good paymasters. Like they don't pay on time at all.
Hmm.
So generally the
Right.
price goes up. So we got that good pricing and good, rapport with all these guys because we paid them on time, or sometimes we even paid in advance. Like we worked with India Post. Not many believe this, right? People still think delivery or Blue Dart and all these guys, like the courier agencies, are the ones which are
Right.
actually good shipping agencies. India Post has such a good connectivity, and of course every zip code is serviceable, and they are one of the best in terms of commercials. We went and struck a deal with India Post, which was completely prepaid. So we paid them ahead of time. So whenever we said, like, even at probably 10
Hmm.
in the evening, we had something to be shipped, the postman would actually come and pick it up. So it is that good, right? And then like, so we paid vendors on time, we paid people on time, and we always said, let's at least ration 2 to 3 months of money, in the bank, right? Like otherwise
Right.
we will always have some sort of panic attack all the time if we are unable to, do that. And that's when we raised a small friends and family round. Like that was the only funding before the actual VC funding and all. We
Right.
like very close buddies who wanted to actually join us, who thought like we are actually building their dream or making their dream come true. Right, very close buddies. They actually backed us. So each of them like 5 lakhs, 10 lakhs each, and so we raised about 100K back then. This was 2016, early 2016. We
Mm.
were happy with that, and we knew that there is enough insurance in the bank, and we were able to pay everybody, like whoever were helping us build. So we were happy with that. But by 2016, by the time Demon happened and all that, QR suddenly became important, and we had the technology ready, like immediately available. So we were able to onboard almost, I think, 14 banks in a matter of 6 months.
Wow.
Then the QR technology and all, right? Like how to scan,
Okay.
how to pay, how to interpret a QR, how to read it. All these things we had as like small bits. What do you call that? Today we call as SDK or
Mm.
executable code. Back then, none of these jargons existed. So we just said, okay, take this piece of code, embed in your mobile banking app. You are ready to scan and pay. And we gave a bunch of APIs which they could use to kind of go live, right? Like on 2017 February, RBI launched Bharat QR, which is basically Visa, MasterCard, RuPay, plus UPI added on top of it.
Mhm.
This was a common QR standard that was launched. It's a EMB core standard, like a tag length value format QR, which launched, which is till date, that is the QR standard that India is following. 14 banks went live on February 19, 2017, of which 8 were our banks, like the banks that we were powering. So
Okay.
yeah, I mean, then that's when we actually started thinking like, okay, the importance of infrastructure, because we had the QR as a technology, we made it, look like railroads, right? Like it was readily available. All we needed was customize according to each deployment and then, deploy it, right? That's when the infrastructure word actually kind of bit us, right? Like, okay, how can we actually rethink the entire piece or entire spectrum of financial services offerings? How can we actually make each of these take the boring path of abstracting out all these things, right? Generally
Right.
people are happy doing the experiential stuff or the
Mm.
AML stuff and all that, right? Like, but nobody actually works on the actual algorithms or the abstract stuff.
True. True.
This is the journey that we took from there on. Like we probably took a small pivot in 2016. We said, okay, all these are great, it pays our salaries, it basically puts food on the table, but we can't just become a great company by doing just this, right? Like, we are at best doing offering something which is cheaper than somebody else, and it's only a
Yeah.
matter of time somebody else will come and offer it much cheaper than
True.
you.
True.
So what is the actual value prop, right? That was the question that we kept asking ourselves. And then then we took a pivot and started thinking of on the lines of building infrastructure.
Got it. Got it. Yeah, this is very interesting, Prabhu. Everyone, if you have a question, please feel free to post in the chat. I mean, we'll try to pick it from there and come. Uh, I think, Prabhu, you have already covered a lot of the questions I had. Like, one thing I really wanted to ask you is, like, today a lot of startups, they first think about funding. Let me raise some funding, then I should start up. I should have money in the bank. Uh, but, like for 6 years, you guys were not funded. There would have been a lot of FOMO that, yeah, this guy is not
Absolutely.
doing anything. Yeah, even he's raising, he doesn't have a good product. Look at him, he has raised. So how
Absolutely.
did you guys maintain, your composure, or like what was that tipping point which told you that now you see I'm ready to go in the market and raise funds? What was that?
See, let me be very honest. Okay, the three
Yeah,
of
sure.
us, we grew up in a very, I would say, middle or lower middle class kind of household. Okay, there
Mhm.
is always a neighbor who always gets fancy stuff. So you
Right.
always are on off, going and getting that somehow. But you know for sure what your limitations are. So we thought like what we are building, honestly speaking, when it comes to the business part of things, like this is our. I mean, why I said that is that's how we had grown, right? Like we were brought up in that manner. So we really
Mhm.
did not actually have this. fanciness come and affect us. Okay, so it was,
Okay.
while the glitz and glory are great for funded startups, we knew for sure like we can be a great company even by being bootstrapped forever. We thought like, we looked at Zoho for inspiration. We looked at
Right.
like Warren Buffett for inspiration, like doing the right
Yeah.
things. How do you actually, take a first principles approach to first get all these stuff in order, and then automatically results will follow, is what we thought, told ourselves. But when it comes to business, right, like what happens is, our kind of business, it's a slow going, like it's a slow burn. There is no infrastructure company that got VC funding in its first year of existence. Absolutely, I can't remember, right? Like not just
Mm.
financial services infra. Take any infra, take insurance infra. If Zirada
Right.
wanted to go and raise funds in their first year, they wouldn't have, nobody would have backed them in the first year, or even given them this much, what do you call, attention as they have today, because they've really made it big. Why? Because the founders thought, okay, this is like a very price sensitive, very boring, very resource intensive kind of operation that we are trying to build. So it has to attain a certain scale when people will actually start, looking at the right side of these things, right? Like
Right.
financial services, like let's say core banking, or like card issuing, or QR payments like UPI or anything, right? You need to actually have enough patience. Like it is easily about 8 to 12 months of build, and then
Mm-hmm.
test, and then actually get your first customer, and then deploy, and then go live, right? Like actually scale it. So it's
Got
anywhere
it.
between 18 to 24 months of hard work. So when I said we took the pivot in 2016, around the time of Demon, okay, to actually start focusing on building the railroads for financial services, we said we took three approaches. One is build on the QR railroad. Second,
Right.
build on the cards railroad. Third is
Mm-hmm.
build a layer which will actually interface with banks.
Got it.
So, and all of these three will actually, it'll be like a horizontal loop will be there across all these three, because we thought from there on, if
Mm.
UPI is the way to go, where UPI is seen as the next big thing, and Indian banks already had immediate payments available back then. In 2010 itself, IMPS was launched, and then cards was actually getting hotter. Like everybody wanted to launch credit linked cards, and the slices and the unis and the one cards. All these companies were born around the same time between 2016 to 19, right? All of the big card issuers today, right? Like, so we thought like we should focus on these three main products. And in cards, let's say if we want to actually build railroads, what does it mean? Go back to Visa, MasterCard, RuPay, ask them for network connectivity, ask them for the actual physical infra, and then you get the actual traffic in place, then get it certified according to the, interfaces, right? Like each and every
Right.
interchange have their own methodologies. So we need to get certified. So which means we have to build a interpreter, switch, host, and then we have to build an accounting engine, the authorization engine. We should get hardware security modules to actually authenticate card transactions. All of these things, like it requires cryptography and some knowledge into how to kind of match pins, or validate card verification values, pins, and all these things. So all of these things had to be acquired. On one side we had to acquire knowledge, on the other side we had to actually assemble a set of bunch of hardware, and then actually connect all these things and build, right? Which was such a boring thing. No company, I'm telling you, even today, right? Like
Mm.
no company of our size, or even similar size, or even 2x or 3x of our size, has all of these things available at their site.
Right.
Either they buy it from somebody, like in a subscription kind of thing, or they basically rent it, or they just don't do it. Say, for instance, uh, FSS of all people, like they're a 30-year-old company. They don't have the direct connectivity to Visa. They don't have the direct connectivity to Mastercard. They use our network, right? Like similarly, there are a bunch of companies, like even Razorpay works with us. uh,
Okay.
Amazon Pay works with us, right? Like, why? It's not because Amazon doesn't have the money. It's basically a boring stuff. Not everybody
Correct.
has to do it. If somebody has done it, can you just get it as a service? That's about it, right? So we thought, okay, we can't be that player where we call ourselves as like, can Amazon or AWS say I'm an infrastructure provider without having the servers in it? No, right? So you
No.
have to act the actual bare metal infrastructure,
Yeah. Right.
and then build that experiential layer, and then say this is my cloud, right?
Got
That's
it.
how we thought like financial services should be. So we thought we'll build the building blocks, get all these things in order, get our
Hmm.
rack space, get all these stuff stacked there, connect it, and then start certifying. So this went on from 2016 all the way till 2018. And then
Wow.
we started building the cards infra, right? Like infra in the sense, this basically gives us the railroad. And then we can start building products like prepaid, debit, credit, purchase card,
Right.
large card, corporate card, whatever is the variant of cards that you know of, we can actually build any of those. We have built
Okay.
most of those. If at all there is anything that we have not built, we can anyway we can still go ahead and build because we have the direct pipe already in terminated our data center.
Interesting.
That's the approach we took. Yeah,
Interesting. We have one question, Prabhu, here that if you had to do it all over again, would you still choose being bootstrapped?
absolutely. See,
Okay.
bootstrapping gives, again, it's the same thing. So bootstrapping gives us that. See, I'll tell you, investors are not bad. Raising VC funding is not bad. I'm telling you, we have
Hmm.
lived both. I would say we have gone through both the journeys. Both are exciting. Both have their own advantages and disadvantages. But with VC money, what happens is that you are naturally inclined to show result quickly.
Yeah.
Okay? Because a business like us, where we are not a consumer facing, so publicly open or known business, for us, the only thing that will actually make a big, I would say statement is our actual revenue and money that
Correct.
we have in the bank, right? Like we collect in the bank or the billing that we do. So, which means the moment you raise funds, you always think that hitting those revenue targets, hitting those number targets are super important. So you stop focusing on innovating alone and start focusing more on business. The
Right.
Probably the bias, or I don't know, it tilts more towards the focusing on business side of things, right? Innovation kind of takes a backseat even in your mind, right? Because we always think we are answerable to somebody, but while it is
Correct.
not, like investors don't chase you for showing results all the time. They still back you in experimenting certain stuff, but it is naturally a human tendency to be to feel obliged, right?
Yeah.
While bootstrapping, we were able to take that hard and fast call of, hey, we have friends and family money in the bank, which is like probably 770, 80 lakhs, and we have some savings. We can actually afford to stop sales and just focus on building this, basically attain this product target, right? At least let go of this tech debt, right? That call you will never be able to take once you actually have raised funding, because you keep updating them and you always
True.
start following a rhythm. So you
True.
really can't stop and say, okay, I want to smell the roses for some time and then go back. It
Yeah.
doesn't happen.
Understood. Vikas, I'll come to your question. It's there in the flow. Next, Prabhu, I wanted to talk about, like impact of regulations, like, I mean, a lot of startups were working with you, then the regulation came and a lot of people who were offering a line of credit on prepaid card, like this also affected your business. Now yeah, so like being an infra player, sometimes maybe you are not taking those calls. I mean, like it was not your call that I will do a LOC on a prepaid card, right? But you also get affected in that. So
Absolutely.
yeah, right? So how do you, like tackle regulation? How do you think about, now even as a infra player, you need to think about regulation that tomorrow this can come and affect me, right? So yeah. So how do you balance that? How do you think about those things?
Yeah, very good and important questions here. Like,
Mm.
see, in a very highly, I think all the folks here would agree that we are living in a market which is in which the regulator or the regulators, like I think some of you are from InsurTech as well, whether it is even if there are somebody from the wealth management side. So SEBI, RBI, and IRDA, these three are known to be some of the most, I would say, active kind of regulators.
Right.
You don't see a circular being released almost twice or thrice in a month in any other country, right? There
Mm.
is always some master direction that gets changed or amended or like rethought. So this, why, I mean, this is good, I would say. On one side, while the regulations are good, On the other
Right.
side, as operators, what we need to be aware of, like we should keep our ears close to the ground. We should always anticipate
Hmm.
certain things that are in the gray. When you are building, you know
Okay.
for sure like some of the loopholes that you try to, because startups generally challenge status quo, right? Like we keep
Hmm.
challenging status quo. Like if things are working as it is supposed to work, great
Right.
startups are always built by challenging status quo. Like Amazon started by saying that, hey, you need not visit a physical store. You can
Right.
do it by shipping it, right? Like similarly, every other idea always
Hmm.
get challenged. So but in some of these cases, if the idea is in the gray area, it's not black or white, you should always tread with caution. That's I would say our honest experience and learning in this entire 9-year period, right? Regulations will generally try to remove whatever is gray. They'll slowly try to pluck it out and say either this is approved or this is not approved, right?
Right.
uh, when all these credit linked prepaid like credit linked companies, like basically offering credit on a prepaid kind of a model, when these were getting built, there were also lot of, I would say, lot of action around buy now pay later back in the
Hmm.
US.
Yeah.
All of Europe, you saw many companies like Fast, Affirm, uh,
Klarna.
Klarna, and all
Yeah.
these companies like minted money and
Hmm.
they basically scaled exponentially because
Right.
that new form of credit became
Hmm.
so desirable, right? And it also many people also thought like this is bringing in financial inclusion, financial literacy and all that, but actually the regulator took a very different approach. The reason for clamping down on all these things, making easy products go away, is not because the products are so innovative, it's disrupting the old players and all that. That's not the case. The
Hmm.
case was
Hmm.
that in giving a 10,000 rupee loan to a college kid, you're basically spoiling the system.
Right.
That's where the regulator is coming to. So if you're making access to credit easy for a farmer, it's good. But
Yeah.
for a student who's supposed to earn it, if you're making it easy, then it's a systemic
Hmm.
issue. Then these kids will actually get into a trap, credit trap basically,
Right.
debt trap basically. They'll access that credit, buy something, and then they'll not be able to pay back, and then they'll get into a credit trap or debt trap, and then for at least half a decade or so, their life will be impacted. They'll not have a good
Correct.
score and all that. So this was the reason why many of these things were actually uh,
Hmm.
kind of I would say this is one of the biggest reasons or motivators for the regulator to take such a hard call. There were
Got
several
it.
companies that got affected. It affected us as well in terms of volumes and
Hmm.
revenues. But what we knew was that we had to anticipate this at some point of time because this was basically playing in the gray, right? So ever since we started raising funding, we
Hmm.
up like we basically moved to a, instead of horizontal company, we moved to a product kind of a company where we
Right.
verticals. All this fintech action we had as one vertical, but we started
Yeah.
focusing on our actual financial services vertical, which is basically building for banks, NBFCs, and all the PPIs and all the regulated institutions. Ho- Fortunately for us, the regulation for this lending related regulation came in 2020 November, 2022
Hmm.
November. But
Hmm.
in back in 2020, I think after first wave of COVID, once we got back to offices by June July timeframe, we started
Hmm.
working on this, the productization.
Okay.
So we started focusing more on building for banks, building operating
Right.
systems for banks and all that, right? So that kind of scaled up. It was like a 1.5 year journey again. By the time this regulation came in, and suddenly fintech businesses saw a lot of challenges, our banking business actually grew. So we
Hmm.
were kind of saved as a company because we had somehow taken, I would say we were lucky as well. We took the right calls at the right time. But many companies actually, like say for instance Zest Money, they actually went down because they had a M&A deal and then they finally could not make it, and it was not
Right.
sustainable for them to continue with the new regulations in place. So there were, like, it's a sad story, right? Like many companies actually went through that, this is the only model that I have.
Hmm.
That is
Hmm.
again a big learning. We thought, okay, going forward, none of the product lines, none of the businesses, none of the banks or none of the fintechs should be more
Hmm.
than 10% of our revenue base. If at all one thing is challenged, okay, it's at best a 10% or 20% haircut. We should still be able to ride over that wave. That is another learning. This
Yeah.
learning we had in 2020 as well. I think when
Hmm.
Yes Bank went into moratorium in March of
Right.
2020, just prior to COVID. Like 40% of our business was basically stuck. Our whole
Got it.
fast multi-currency travel card business was, sponsored by Yes Bank, and it just got
Okay.
stuck. Basically, like suddenly dropped dead, right? And then it came back, and then COVID happened. So
Right.
March, April, May of 2020 was like a complete washout. We had like, absolutely, what do you call, a crazy time in terms of revenues. But the good part was we raised funding. Our Series A happened in March again. So
Right.
it was, we blew both hot and cold at that time.
Very interesting, Prabhu. Like at the one time, we're trying to tell startups focus on one product. Then we're talking about concentration risk, like
Yeah.
10% of your revenue should not come, let's say, from one product, one market. So today, let's say M2P, right? You've expanded. I think even Vikas has the same question. You've expanded to multiple markets, multiple geographies. I can say different products lines like core banking, identity, a lot of things, right? What are the various challenges that you have seen and in expanding so rapidly? Like in the last, I think 2 to 3 years, the expansion has just been like the hockey stick curve. It's just hit it out of the park. Huh?
Yeah, absolutely. I think
Yeah.
the work started back in 2018 when we started
Okay.
building the product journeys. As I told you,
Hmm.
from 2016 end all the way till early 2018, for 1.5 years, we were building the railroads for the cards infra
Right.
and the UPI infra and the banking infra.
Hmm.
2018 mid onwards, we started building the actual product journeys. Like we started
Okay.
building a credit card stack, we started building a debit card stack, we started building a neo banking stack, the UPI stack, and all that, right? Like each of these
Hmm.
became stacks. And each of these actually started finding customers from 2019 onwards. And then
Okay.
right after the small blip in COVID, we had all of these customers going live, and actually digital became a much appreciated kind of aspect. UPI suddenly exploded, like you would have seen, right? Like during COVID, UPI grew almost 3x, 4x in terms of volume and all
Right.
that.
Right.
So all of these efforts that we put in 2018 started bearing fruit only in 2020, 21, 22, right?
Right.
So we had good uptake of our product lines. What we did was, after raising funding, I'll tell you the primary reason for us to even go and raise funds. I'll probably take a minute explaining that, right?
Hmm.
We as a company, as I told you, we at best need about 2 to 3 months of working capital. You can always
Right.
go for a OD line or something and still make it work, right? We never had to raise funds. But why we needed funds was, what we built in India and what worked in India is such a frugal product,
Hmm.
right? If
Hmm.
the software stack, which can actually power cards and power UPI and real time payments, can work in India in a market where nobody pays any convenience fee for anything, right?
Right.
When have you actually paid a convenience fee for making a payment? You don't, right? The
Hmm.
Indian customers are so price conscious. Even add, like, let's say today you pay is free. Let's say you charge 50 paise per transaction, which is nothing, right? Even if you charge that, the volume will just come down by 60-70%, probably, right?
Correct.
Maybe wrong,
Correct.
but definitely it'll have a sudden drop in the volume, right? Why? Because India is so price conscious. We thought, okay, what we have built is working in India. We are still able to make money, make profits.
Hmm.
Can we actually replicate a similar story in adjacent markets? At least
Got it.
spread our wings and see if we can do it, in other markets. And we didn't want to really get fancy and go to the US or UK or the European region or anything. Why? Because
Hmm.
one, we thought, again, another a strong principle of ours, that whichever market we go, we should actually be fully invested in it. We should be able to
Okay.
go and spend time there, understand the market, and do what it takes to kind of win that market, right? So we
Got
thought we
it.
chose Middle East as the first market. We went to Dubai, I mean
Hmm.
Abu Dhabi, and registered a company, our subsidiary there, and then we started with that. Like this was August 2020. But this was the primary reason we raised funding, because for an Indian company to kind of go and register a company abroad, find an
Right.
account there, hire local talent, it is minimum of 3x to 4x expensive for each and every cost item. Like if you want to register a company, it is at best a 50-60,000 rupee kind of game here, whereas it takes almost easily 5 to 6 lakhs over there, right? Everything, right? Like people, even a basic clerical kind of a person here, like an admin person here, you get at sub 25K of salary. Over there, it is easily like, at least 3x.
Got it. Yeah.
So we thought
True.
like, okay, we really can't earn in India in INR and start spending in dirhams or dollars. It just doesn't work. So let's actually create a scheme where these are the markets that we are going to target. These are the products that we're going to build, and this is
Hmm.
the deployment plan with which we went and raised funds, and investors were happy to back that, right? uh, and that's when even they started understanding our type of business, because as I told, it's a slow burn business, so VCs won't find any slow burn business to be venture backable or venture fundable immediately. They wanted it to be proved over time, which we were able to show. Like the results were slowly visible. Like by 2020, despite COVID, we still had very strong results. Like right after we went through that first round of lockdown, June July timeframe, we came back very strong and it was very good. So this was the primary reason we raised funding, right? And then with funding in hand, we thought like, okay, let's not again go back to the same old principles and just do 2 or 3 markets in the first wave. We just chose UAE, Saudi, and Oman as
Mhm.
Bahrain as the first 3 markets, and we started
Okay.
putting our efforts there. So I mean, that's how the expansion strategy started. But I have a lot of learnings there. Like I would say, Indian companies spending time there and actually making it work there. What we need to understand is there is no population, there is no real volume game there, but there is
Right.
a lot of value.
Got it.
So that was evident there. Like in the first product or first few products that we were able to kind of
Hmm.
pitch there, you can even charge more and show better value because there's
Right.
no so you have to change your pricing structure and all that, so which we learned. Like it took like almost a year to onboard a couple of customers, and then we were kind of settled that we are now like UAE or Middle East as a market, we are kind of get settling down, but it takes time. uh, it's unlike India,
Right.
where you go meet somebody and then next month you launch. It doesn't work that
Yeah.
way.
Yeah. Understood. Understood. Uh, Prabhu, I'll move on to one more question now. Like M2P has been acquiring a lot of companies. You acquired Citizen, you acquired like UBS, a bunch of them, right? What I've heard a lot that whenever you acquire a company, it's not only the product, it's the culture also. So how do these different cultures, fit into M2P today? How do you make this work?
Honestly, if any of you guys have an answer to that, I'll probably take it. We are trying. See, the
Right.
honest answer is that every founder or every team that we have acquired, for some time we just let them run as it is, as they are, as they
Okay.
were, and then slowly made them kind of realize that there is a larger story. Like, see, for
Hmm.
why we even started acquiring companies, it's not like we are one of the very few companies in India which has been like continuously acquisitive in terms of
Right.
acquiring talent or companies and all that. Why? Because we think,
Mm.
say for instance, we acquired a company called Citizen, which is into identity.
Right.
Even if you give me like all the money that I have, like in terms of investor funding and all that today, I would have never made such a good product like the Citizen guys have done in the last
Okay.
9 years, right? Like it is mainly because of the experience and the kind of hard work they have put in over time. So it is always good to have somebody who is a subject
Mm.
matter expertise in that specific domain, and bring them on board and give them that enough freedom to kind of continue building it and making it a
Right.
larger story. That that is a very I would say, in terms of leadership, we were also quite challenged in terms of how to kind of approach this. We made our mistakes, we understood, we had our sessions. What we did correctly is bringing all of these guys into the same room every quarter,
Mm.
plan for the
Hmm.
quarter. We call it as AOP, which most companies do, most public companies do as well. It's an annual operating plan. Every quarter we
Right.
keep course correcting. We
Okay.
started with AOPs, right?
Hmm.
This started from 2021 onwards when we started acquiring companies. And all of these guys, we told them like, guys, you are still co-founders. We are not
Right.
hiring you because you have great technology, you've built a great product. It is because we need more co-founders. It's not just the three of us anymore. It's like easily a 15-member group now, right?
Right.
So these guys were given on one side there is financial incentive if they do well, if they make the larger group do well, they are incentivized better in terms of financial rewards and all that, ESOPs and all that.
Mhm.
On the other side, there is also acceptance in the market. Like Citizen as a small company, when they approached a bank, they were not able,
Right.
they were not trusted, right? But once they came on board into the M2P family, when M2P
Mhm.
is already servicing the bank in prepaid cards or debit or credit cards, and when they
Right.
go and sell the identity product, it becomes like a cross sell. So the
Got
trust
it.
factor automatically comes in. They know, like people, we are able to open more doors and all that. So they see
Right.
value. What uh, founders, or I know fellow founders who have also acquired and then it didn't go well, right? Like what is the common mistake is that we always trust our culture and our vision, mission, and everything to the new folks. They always
Got
feel
it.
something is changed, right? Humans are super resistant to change. And
True.
honestly, I mean, if we
Yeah.
were to get acquired by some large company, again, the same thing, we would go through the same thing, right? Like if we were
Mm.
trusted upon and we said like, hey, forget about whatever you built for the last 10 years. This is a new story that you're now going to follow. It will not work. So I think we need to give that breathing time and slowly make them realize that the larger story looks good.
Got it.
That's the only way.
Okay. I'll start taking some questions. Apratim, do you want to come on camera and ask your question? I can read it on the chat.
Yes, sure. So, hi, Prabhu. Actually, I mean, we have been facing some issues with regards to PG, payment gateway, and was going through. So, we essentially are an LSP for an NBFC. So, we do require a PG for our NBFC partner and also your KYC suite. So, I just raised a request on your website also for this, but just wanted to know that the UPI intent, which is listed on the website, can it be used to collect loan repayments just like a typical PG, uh, or how does it work?
We can. So it is basically the device in which the user is actually accessing it. Like if the user is using an Android device or something, using the intent flow, we can actually make the user, I mean, everything is filled well. All they need to do is just click pay and enter their pin, you pay pin,
Mhm.
and go ahead. That is quite possible. And it is actually widely adopted, like Razor Pay or Just Pay or any payment gateway that you use, not just M2P, like any payment gateway. It's a done and dusted kind of model. But one good part is it is also like even if you go for a card based payment also, the similar experience is now available because of 3ds 2.0, where there is a very similar concept like intent flow. There is a similar concept where if you have, let's say, your iMobile app, let's say you are using ICICI Bank, we
Okay.
can actually show click the or trigger the ICICI Bank's intent or mobile banking intent to actually invoke that.
Acha. Okay.
I mean, like every app, like you Amazon Pay or Cred or any app, you can actually create that intent flow has become much more stronger now.
Okay.
We can
Okay.
discuss about it. Yeah.
And this is
Sure.
currently available, and this is not as if, I mean, like Razorpay is not offering or Payu is not offering, let's say, these PG services or UPI as of now, but this is available on M2P's website.
Yeah, it is. So the challenge is in onboarding somebody as a merchant. That is where in some of these cases where it gets challenging. Razorpay has been asked to kind of hold on any new merchant onboarding. Like you have to be onboarded as a merchant because you're accepting payment from a customer, right? RBI always goes for how can I protect the customer from him or her basically sending their funds to somebody, and how can I make that party, like whether it's a merchant or a company, be like basically make them follow all the guidelines to make sure the customer at all times has enough grievance redressal and all like support, tech support kind of offerings available. So that's the background behind making all these things an approval based kind of system. So all we need to do is like basically we'll have to onboard you as a merchant and then offer you all these services, right?
Okay.
That goes through an approval cycle. That's where most of these companies are stuck. We always have a way out, boss.
Okay.
So what I'll request, Prabhu, you can just connect
Yeah.
us to one person. I think a lot of the startups would love to use the solutions like identity, payments from you. So please just share us one name who can, work with them and help onboard them and answer their queries on that.
Sure.
Ashok, I would love to jump to your question. I think you asked a very pertinent question. You please, would you come and ask it?
And
Yeah.
Suchir, if at all,
Yeah.
if at all it is timeout, just call it out. Okay, I'm absolutely
No,
fine.
no, it's not time out for us until we get you tired. So,
Okay.
Yeah,
Hi,
yeah,
Prabhu. Good evening.
yeah.
Thanks for the inspiring session. The question to you is that you were talking about your friends and family round so to kickstart your funding, and because your funding was delayed, did you ever had a fear of exhaustion of the friends and family fund, and the fear of any VC joining in? Did you had any workaround for that? Did you consider that scenario and did something?
Yeah, see, let me be very honest. We have faced near-death situation at least a dozen times. Okay, in these
Oh
6
God.
years. Okay, every other month it is always, see, because honestly, we are offering our products mostly to largely to banks and financial services companies, and all of these guys pay so badly. I would say, I mean, pay
Correct.
badly in the sense it just goes through that entire workflow is so what do you call, so tedious that it takes time. You can't
What was
just
your burn rate then, Prabhu? What was your typical burn rate those days?
see, burn rate was less. I would say probably monthly sub 50, 60 lakhs. We were at a, let me be, so first 5 years, we were at sub 5 crores of revenue, and we were just about profitable because we founders did not take market salaries. So we thought we just took whatever was required to basically keep our, lives going, right? So we were actually profitable. So the burn rate was sub 50 lakhs a month, something like that. But the problem, I'll tell you, the problem was collecting money from somebody where we have already raised invoice. The average aging for that invoice to actually money in the bank is like anywhere between 45 to 90, 120 days. That was the problem. So we had to basically, I had actually, I made a visit to Cochin to meet Federal Bank, and then I went back to the airport, and I thought I'll take a flight to Chennai if the payment had come, and I'll go to Bombay if the payment has not come. I had actually stood in the airport to see which flight to take. Okay, there were situations like that. It was the 30th or 31st of a month. I very well remember. Okay, and we had to kind of do such stuff like go in person, get it collected, and all that, right? So that such situations where aplenty was. But what we did was the money that we had as, and good part is we did not have one OD line. Despite having an OD line, we never had borrowed even a rupee in terms of loan, right? We always had an option of, if at all we run out of cash, we can always go grab a 1 crore or whatever line which is available based on our records. And there is also the other option of all of you guys, if you're working in financial services domain, if you're working with banks, which where a bank is going to pay you, your invoices are valuable. You can always go for invoice discounting kind of option for working capital.
Right.
There are a bunch of companies like UB or many people who actually offer that. Today it has become much more easy. In fact, it has become so tech savvy now. So you can always have your invoices uploaded to an invoice discounting kind of lender, and you can get it, get upfront cash. If at all your invoice gets delayed, you can get upfront cash. So today you'll not face such near-death situations, but yeah, we have had many. I would say we are honestly lucky, boss. God has been kind, and so we had survived, but we did not touch that insurance fund. The insurance fund was basically for 2 months of salaries. If at all something went fundamentally wrong, and the other fear that we always had was somebody can hack us, right? Not hack
Right.
us, hack a bank or somebody who we are partnering with, and any damage is collateral damage for us, right? So that was always there. That fear was always.
Got it.
Fantastic. Thanks so much, Prabhu.
Yeah. Prabhu, I would like to jump a little to, like you're working with a lot of regulated entities, you're working with large incumbents today. I mean, how is the sales cycle? Sometimes the sales cycle itself might take a very long time to close. So how do you manage that?
Yeah, so I think very good question. In fact, in the financial services world, sales cycle is on an average 6 months plus. It's a long gestation cycle. There are two approaches. One, you go step by step, meet every level of person, and then go to the decision maker and then make the decision. Or
Right.
wait for the right time to actually meet the decision maker, do one shot, go top down. right?
Mhm.
More often than not, we have taken the other approach, like the second approach, because Madhu drives business development for us. So he always waits for, because thanks to his time at Visa, he knew the market. He had a 360-degree view of the market. He knew people. At
Mhm.
least who's the decision maker is something that he knew. Like even if it
Okay.
takes 2 months to get that right appointment, wait for it and make best use of that opportunity. That was the kind of approach that we took. Recommendations don't work here. Like even if you know people, doesn't mean they'll take you, because most of the
Got
banks
it.
have a committee to take decisions, like a
Okay.
procurement committee or something, right? Like you really have to
Mhm.
have the merit to kind of get going. So
Right.
opportunity to a meeting, yes, we will get, but then we'll have to go. We'll have probably one good crack at every customer, right? So we have
Mhm.
to make the best of it. And good part is, if you have a bunch of offerings, if one doesn't work, you know that you've lost it. You can always pitch something else. So
Right.
I strongly believe in actually selling something and coming back. You are a good sales guy only if you sold at least something, right? Uh, like none of these things work. We'll at least sell our KYC offering and come back. And then after seeing our good work, they'll slowly start trusting us more. Because in all of
Right.
these things, right, like banking advice, what boss, we are talking about in whole of India, there are only 850 banks. I'm talking about banks like RRBs, rural banks, cooperative banks, commercial banks, payment banks, all put together, we only have 850 banks. And if you take the most active banks, there are only 50. So at best, you can go through one area in BKC and you can cover 80% of the Indian banks in one shot. Okay. So
Right.
word spreads. If you do good work with one customer, you actually walk the talk, then automatically these bankers talk. They are in WhatsApp groups and all that, right? Telegram groups and WhatsApp groups. So the word spreads and you are immediately, most wanted. That's when I think early part of this call you asked a question, how to kind of keep yourself not being distracted. I'm telling you, we
Right.
have had umpteen number of offers to build mobile banking apps or super
Right.
apps for many of these banks. We said we are not good at app development. We are not good at design. We are not good at UI UX. We said the only thing that we know very well is the back end boring engine room stuff, right? Like the APIs, the actual back end jobs and all that. We said we have an arm's length player who you can work with. We will not actually do this, right? That is a learning that I think it has served us well. Had we ever taken the journey of developing apps for banks and all that, what will happen is apps just don't work all the time, right? Like you will have to
Yeah.
building is the easiest part, and then servicing it, right? Like you'll have to Android releases some security patch or the other every other week. You keep
Right.
servicing it. So it's like you go in a tailspin. So we kind of resisted that forever. Till date, we have not taken
Understood.
any place where we'll only build this app. That's the only part. Like there are places where we have built the experience as well. Like app also was part of the deliverable, but the core deliverable is like either a core banking play or a credit card play or something else. You need to be true to
Got it.
yourself. Like that's the only learning. And since we were not greedy to kind of always show some revenues or run rate in our books, we said we will still not do it.
Understood. Uh, Prabhu, I would like to now jump to a question on hiring. Like when you are going to an international market, let's say you're going to Kenya. Now, would you prefer to take a seasoned M2P executive there to set up the business, or would you hire a local person who knows the market?
Both. For us, we first tried the first model. Okay, it didn't really work. In fact, honestly speaking, one of the fintech founders who actually set up shop in like spread across, right? Like in fact bunch of them, right? Like Instagram, now it is called as Niam. There
Hmm.
in
Hmm.
the US, we took some advice from them. We took advice of many fintech founders over here who have actually worked elsewhere, like abroad. The advice was that always don't go for try to promote somebody from India to another market and suddenly expect results, right? You should always have
Right.
somebody locally to support you. So at least hire somebody as a consultant. If you cannot afford, hire somebody as a consultant. So this we did, right? Like in Dubai, we actually went for a consultant for about 6 to
Mhm.
8 months, and then they joined full time and all that. But we actually the whole of the team that is there in UAE, which is basically our hub for the whole of Middle East, we only have locals. Our locals in the sense, many of them are Indians, but settled in UAE for a very long time, right? They know
Got
the
it.
market in and out. we invested in the local talent, but product is basically Indian, right? Like we are building from here, so we had to move some tech people from here to Dubai and all that, right? So that's what we did. Same story we repeated in Southeast Asia. Whenever, if and when we move to US or expand into US, this is the exact same approach we'll do. We'll probably hire somebody locally, and then also mix them with product or tech buddies from the base location.
Got it.
Yeah.
Understood. Like M2P has come up with some very interesting policies, like moonlighting. You said that, we will not be against moonlighting. In fact, come and moonlight with us. How open are you, let's say, if your employees go and moonlight with someone else?
No, I mean, like, I am absolutely okay. See, let me be honest with you, right?
Mm.
All of us are aware. All the people in this room, everybody is aware that their key people, they are not just
Yeah,
working only on this, right? This is not their only
true.
focus. They always have some hobby project or some dream that they are working on. Either you accept it and say, hey, I am absolutely cool, but for the time that you are spending with me, for the money that I'm paying you, you work honestly with me, embrace them and just tell them, like, hey, we are adults, like, let's just know our responsibilities and act responsibly. That's one approach. Or that's the approach where you build trust and you actually trust them. Don't kind of
Right.
or the other approach is like, just don't trust them at all. Just implement whatever controls you want on earth and basically monitor them, right? I think the second approach doesn't suit us because we have never built anything that way and it has never been fruitful. Our folks are super good in terms of reverse engineering, so whatever controls you put in place, they'll find a way to kind of you know
Yeah,
uh, dupe
true,
that. So we
true,
thought, like,
true.
okay, our folks, they're gonna be like, and honestly, what are we doing here, right? Like, we the three of us, when we started again, we thought what we should create over time is not valuation or money or anything. We should actually
Yeah,
create
yeah,
value,
true.
right? That's our value system. When we create value, money will automatically follow, and good folks will automatically stick with you if they see that value. Everybody,
Right,
whoever are in M2P, I'm not saying we are the best paymasters. There are always companies which can pay better than us. Like B2C companies will generally pay better than the B2B companies. But why are they sticking with us? Because they think they are doing something that is changing the world. That is something that we need to. We as founders have that responsibility of motivating folks. What is this actually? How is this actually meaningful for the end user or somebody who is basically a farmer? How is this
right,
loan going changing their life? That is the truth, basically, right? Like the hard truth sometimes get lost in all the glitz and grammar that gets lost, right? So we need to keep uh, you know uh, 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 kind of tingling that. So with Moonlight, which is basically what I started as, like in our people policy, I said, boss, every software developer out there, he or she is probably doing a project in freelancer.com or wherever it is. Just make it official. Let them disclose 8 or 10 hours in a day. What we kind of hire them for is what
right,
need to be committed to us. Let it be open, and it's not just for developers, right? Like there are, I'll tell you, there are sports people in our company. There are dudes who are actually paying for Tamil Nadu Division 1, 2 leagues. Some people who are actually bold to Chennai Super Kings in the nets, right?
nice,
There are folks who are musicians. There are stand-up comedians. There is a
right,
guy named Karthik Durai who is part of Comicstan. He's there on Amazon Prime. He does stand-up comedy shows in the weekends
okay,
and on Fridays. So it's up to him to kind of finish his work before 4 or whatever time, and then go to whichever club he's going to give the show and do it. And the moment you trust him, no, he actually is one of the best performers, I would say,
yeah,
right?
yeah, I agree.
They pay you back. Like they basically, whatever trust you bestow on them, they generally give it good to you.
Interesting. I see a question. Is that a question, Vikas? I see your hand raised. Yeah, please
Yeah,
go ahead.
thank you, Sincere. Hey, Prabhu. So, like you've acquired lot of companies, and as you said, like you bring in a local person and an India folk and expand while you're expanding to the next market. So we kind of we're also while we are expanding to different markets, we have people coming in from UK who've been part of maybe similar business with a very different thought process, how it is run there. Then somebody who's coming in Southeast Asia, very different thought process. So how do you keep these guys aligned to a common thought process? Either you keep it like very founder centric, like what we thought as a founder, we keep them aligned to the same, or we kind of get into their shoes and start doing what kind of give them a free run to kind of run it their way. So, what would be your inputs, or uh,
I would
how
say a
would
mix
you?
of, yeah, I'd say a mix of both. Very important question that is, right? Like very good question. So I would say we'll have to hit a balance, boss. We have to hit a fine balance. If you keep pushing your story down their throat, it might not actually suit. Like this, the problem of poverty and financial non-inclusion that we see in India today. Probably we can say everybody has a Jandan account and all that. If you try to sell the same story for somebody in UK, it won't work. Over there everybody has a bank account, or everybody has access to financial. It's a given, right? And in the US there is always a social security number. So whatever you do around direct benefit transfer and all that, if you go and sell, it might not work, right? But there are many things that will actually work there, which will not work here as well. So what we need to do is, like, we should actually try to draw a heat map of our product capabilities, people, like what are the things that actually works well here and all that. Like if you're able to draw a heat map and overlap it with the heat map of that market, probably talk to founders who have actually done well there and all that, you will see some of the items that are overlapping. You'll be able to identify those, and all those things you can actually go with your method. Whatever are not working in our method, which is over there, you should actually basically say, okay, I'll not even try this, right? That's a good way to do it. Like we learned it over like last 2 3 years, I would say. Say for instance, I'll give you an example as well. Like in the Middle East, or anywhere, right? Like any Muslim country, Islamic country, uh, the banking laws is such that, like, Islamic law is such that they won't pay you interest, right?
Right.
Like Islamic banking laws. So you need to understand that. Like you can't just have every screen saying this is the interest rate, this, that, or all. Like it is charged differently. It is probably charged as convenience fee or usage fee or something like that, right? So you have to go back to your abstraction, go back to your product's roots, and modify it accordingly. That what will this be called? Go to your product and say, adjust this as something else, right? Or display this as something else. So we had to do some product correction as well. And similarly with people, we have Emiratis on board in our UAE office. For them, I think uh, good compensation benefits and all these things are not what they basically come for. Like they're basically not so middle classy types like us, right? Like so they generally look for something else, like taking them to events, making them, giving them more exposure, or allowing them to own a department and probably give them very different type of targets. Those are things, or probably make them or get them good networking opportunities and all that. That is what they want, right? So like these are some of the examples that I can remember. But yeah, every market, I think we should play to the tune.
Got it. Thank you so much, Prabhu. This Islamic one, we also got it when we were getting into Malaysia with Islamic Bank. So yeah, thank you so much. Thank you.
Great. Okay, we are running out of time. Any last questions from anyone, before we close? Please feel free. Okay, nothing. So, Prabhu, I have just one last question for you, then we can wrap it up. You are a very active angel investor as well, Prabhu. So, like, what is it that, you look for in the companies that you are investing in? Any tips, you would like to give to the founders, let's say, because a lot of them will be pitching today to start to VCs and everyone.
Yeah. So I think uh, how well is the team is what I actually look for. I, as an investor, or I've also been an IC in a couple of the funds as well. So the team is super important, boss. Like how good
Right.
is the team in terms of subject matter expertise, in terms of what they talk, right? Like are they able to back it up with experience, or real data points and stuff, right? That is super important. Idea is okay, everybody has an idea, but execution, like how well are you able to execute or demonstrate your execution power, right? That is super important. And then the third part is, of course, their awareness when it comes to market realities and stuff. Like, do they have plan B, plan C for
Right.
whatever defensibility question that comes there, right? Like these are probably the top 2 3 kind of criteria that, and I don't generally assess too much, right? Like I think I trust the founders, and there are companies where they try one product, it doesn't work, they just shut and pivot and move to something very differently and still build it, right? Like with the right team, you can actually build anything. So I generally go behind the team. If the team is something of my, I generally back them. And most VCs, what they also look like, even like wearing a VC kind of shoe, like what they look at is how much can this scale? Like what is the actual TAM, like of the larger TAM that people see, like how big a picture is the founder able to see, and how much of that is like actually feasible, actually practically achievable. It's something that most VCs see. Like that is what they call as venture fundable. Can it gain that exponential? Why is SaaS such a a dear product for most VCs? Because in SaaS, the moment you are able to make it right and it is repeatable, you can onboard n number of customers without a hitch, right? That's or it can scale seamlessly. That is why SaaS is so important. Like why most of the VC money goes to SaaS companies or tech-driven companies. Tech basically gives you that multiplying the product or customer deployments is like easy. So yeah, I mean, these are the criteria that most of the investors look for.
Got it. Thank you very much, Prabhu. I think it was really great listening to you. I mean, very good takeaways I have taken. Like, focus is something I could see completely in your journey. There was always a focus. Even when you expanded, like it was not, a haphazard expansion. It was always the synergy, how you've been able to amalgamate these companies without maybe changing the culture of M2P, how they've imbibed, and today, like even your website, it shows everyone as a founder, right? I really loved that part, about that.
So
It really,
I honestly
yeah,
would like to believe there should only be two types of people in startups. Okay, one is the actual founders. Two are the people who have founder mindset. That will solve most of the problems with every startup. But honestly, that's not the truth, right? Like we need to at least get there. Yeah. And one final thing, like I wanted to say this that time I kind of missed. We keep telling this to each other quite a number of times, right? What like what you want to be can keep changing, right? Like it can, like your ambitions keep changing, it's fine, but what you're not is supposed to be known to you quite well. That is where most of us actually go wrong. Like we don't actually rule out what we are not. So we told ourselves we are not an app development company, we are not a software body shop, right? Similarly, each and every company should know that this is something I'm not. So how many ever opportunities that comes across to us, I'll not do it. That's a very important stuff. Great, guys. Thank you so much, Suchit.
Thank you. Thank you so much,
so
Prabhu. Thank you so much for taking out your time. Really appreciate it.